Welcome members to another weekly members update. So Sunday, June the 11th of market close on the June the 9th. Please see the other video regarding the overall market. Although I am going to try and elaborate on that a bit in the members video, because what's going on here, and this affected the Amazon trade and every other tech trade actually, is that although the overall market had a bit of a wobble, just look at what the Nasdaq did. On Friday, this was a major sell-off. This is, and I did say, as long as the overall market cooperates, otherwise all bets are off. And Amazon was doing very well. And then on Friday, the Nasdaq had a massive dump here. I mean, you can see the massive volume rising there. This major sell-off, although it had got quite high anyway. But even so, that's quite dramatic on all that volume there. That's heavy institutional dumping. So. We can look at the S&P 500. It had a bit of a wobble, as I said in the other video. But I look at the Dow Jones, and that's actually had a good day. So what that tells us is that all of a sudden, and they're doing it, it's just so volatile the way these institutions are doing it these days. They're just dumping everything on one day and then shifting into something else is what it seems like. It's almost like a coordinated thing that's going on there. It's quite bizarre action, how sudden it is. We can look at individual sectors, like financial and so on. You can see here, this is the financial sector, and you can see that they'd forgotten about banks for a while, and all of a sudden on Friday there's this huge lurch upwards into banks again. So really, the institutions, the large funds that drive markets, they're all over the place right now, and it's erratic, their behavior. And it's unfortunate, but as I said, that everything went south on the tech on the Friday. If you look at Google, you'll see it there. I mean, look at Google. I mean, it just got killed on high volume, dumped. Facebook, all the big tech stocks getting absolutely whacked on high volume. Apple, and these have been like the market leaders, and without warning, they're absolutely getting killed. So Amazon, it was doing very well, and then nudging upwards, got up to almost we had up there about 112. Then without warning, out of the blue, it just goes down like that. So it's still in a healthy position though. That did sort of stop me out of it, but. Just got to wait and see that. I mean, but it's still well above the 50-day line. So, but that position is what it is. But that was quite crazy action on Friday. On a better note, the yen has started to cooperate, being shorted. I was shorting it up here, and then it came back. Was doing very well. Then it, and as I said last time, nothing wrong with it having another go at getting back above that 200-day line. As long as it doesn't on the weekly chart. So it had a go at that. It was very close actually, and then turned back round again, which is very good for the shorting side. In fact, that's very bearish actually for the end to have 1-2 attempts like that and fail again. You can see on the weekly chart here, which is the one I'm going by with this, by the way. You can see tried there, did not close above the 40-week. And that's just all part of the course as a stock or whatever goes down. It fights a lot, and they'll finally give up. So let's hope that's what happened next with the yen. Let's look at some other stocks here. TTPH hanging in there very nicely, just moving along sideways, waiting for the averages to catch up, and hopefully that'll be very soon. It's very healthy action. They're considering, especially that the whole Nasdaq thing got dumped, so that hang in there well. We've got Caterpillar. Now Caterpillar is doing fine, and that's because you notice the Dow Jones. That would be like those sort of more heavy industrial stocks. That'll be so that's doing fine. And I'm not going to open up any new trades right now because the overall market direction, as I said in the other video, is a little bit indecisive. Let's just check around the blocks to see what's going on though. Gold, interesting. See, now here you can see the correlation between our yen trade and the dollar. Remember, all currencies are sold as a pair. You can't just sell the yen, you have to sell it against something. And when you're something like FXY, which is an ETF, basically you're saying against the dollar. Most things are just pegged against the dollar. So if I'm selling the yen, I'm basically saying that the dollar is going to go up against the yen. So what we've been seeing of late with the yen wasn't so much yen strength, because the yen should be very weak, is much more than dollar weakness. And the dollar, notice how this coincided with the yen rising, because that was really more like the dollar falling. And when the dollar falls, gold goes up. So gold was going up as the dollar was falling, and that was our yen trade. Notice how our yen trade got better when the dollar started falling, and the dollar started going up. In other words, gold was going down. So you see the correlation there. And gold is still in this kind of sideways moving trend. I mean, gold won't always be in keeping with the yen. I'm just saying that you can't run by that. But that just proves the point that this recent burst in the yen was more about dollar weakness, and you just happen to see that in the gold chart. But this is very much a kind of steady trucking along, slightly higher pattern for gold, and it's doing fine. And you can really start to see it there now. This is like a real uptrend that's lasted, better part of the year. And the main thing is it's above and holding above its 40-week moving average, which it doesn't really respect much anyway. But it's literally above average. Let's see what else is going on around. Bonds. Interesting with bonds. Now remember, bonds are considered to be a safer place than stocks, and a more bigger and sophisticated market. So they can be an indicator of what sharp eyes are doing with big money. And TLT is the ticker for that. If we look at the weekly chart here, you can see it's a fairly orderly chart until it gets into a bit of a mess here and doesn't respect the averages much, but overall it can be. And recently I've noticed this little sort of line of resistance here, and it broke above that, pulled back, and then you can see that there's that kind of like pocket of resistance, goes out, pulls back, and then starts above. Now what's important about now is that it's closed above and holding above the 40-week, albeit on a sharply descending moving average. So not the healthiest position for the moving average to be doing that, but the fact that it's got above is interesting. Could be that people are moving to safety in what typically July, August is the most turbulent months of the year, in a market that frankly is extremely overpriced, long overdue for a correction. I will be shocked if there is not some serious correction in July and August. Interestingly, the UK election went a little bit funny, and what happened with the pound reflected that. But the pound, as I've been commentating on, is holding above its 40-week moving average, and that was a bit of a surprise, and it bumped it down there. But it's still, I would argue, in this kind of next box here upwards, holding around 20. If it can hold there at 24 and stay above its 200-day moving average, the pound will still be in good shape. And if they form the government as they're expected to, then I'm sure this is just, as you look at the chart here, I mean, it's pullback, and then that's just all part of the course here so far. And if it can hold here and move on from there, pound will be just fine. So that's all for now, and you should have the invitations to come and see me on June 30th and/or July 1st, 2nd. You can come and go as you please, but really don't miss the Sunday session. If you have any questions about that, let me know. Time's ticking on, seats are running out. I've only got so many seats in the room. Hope to see you soon.